we're an institution. So the life expectancy of an institution is forever. Like if you're a company, right, the company will transcend, it will last past me, right? I'm not a family, right? The life expectancy of a family depends upon the family. It might be 100 years, it might be 10 years, right? It might be you're a solo dude and you're thinking, I just need to have a Lambo in 3 years and nothing else matters but a Lambo or whatever. Institutions have a longer time horizon. The second is we're a profitable institution. So we don't. If you're an individual and you were trading in crypto and you needed to pay your bills and you worried about health insurance, or you got married and you had kids and you want to put your kids in, you want to get a house or buy a car, well, you have near-term cash requirements. MicroStrategy generates cash. Right? When we came down this path, we concluded we would always generate cash. And the reason we concluded this is there's a massive digital transformation, and we realized that no amount of throwing money at sales and marketing will actually grow our business. We couldn't throw money at it if we wanted to. We tried it. It's advantageous to be in business 30 years. Like I've gone through a period where I'm like, I'm going to hire 400 engineers. I'm going to go spend $20 million on marketing trade shows. I spent $20 million on ads on Facebook and LinkedIn. I've spent $500,000 for 2 days of a trade show. I've been there. I've done all that stuff. So I got to the point where I realized that we really couldn't throw money and capital at the core business and make it grow. We had a cash cow. And the problem with the cash cow, by the way, is if the money supply is expanding at 10% a year, which is what it was from 2010 to 2020, if your top line and your cash flows don't grow more than 10% a year, your stock will tank. So the only way to avoid your stock tanking, if you want your stock to be a store of value, you have to grow your cash flow per share greater than the rate of the monetary inflation. This is why Amazon works. Amazon, Google, Facebook grow 20%. That's why they work. This is why Apple bought a lot of their stock back and leveraged up. Right? If you can't grow your top line, you either do acquisitions. This is why Oracle bought a lot of companies. Your choices are you have a monopoly and you grow your top line 20%, or you do a bunch of acquisitions, or you leverage up, or you sell out. Those are your four choices. So imagine if I can't grow 20%, I got a problem. But what happens when the inflation rate goes to 20% and you can't grow 30%? Okay, at that point, it's pretty hopeless. So I kind of realized that I had a good business, but as a public company, it's dead money, because the investor's view is they want you to grow faster than the hurdle rate, or they just rather you roll over and die. It's like, if your father or mother was a doctor and they had a practice and they were doing good business and delivering babies and saving lives, and the inflation rate's 25%, and you said, Mom, Dad, are you going to raise your prices 25% this year? Like, no, my customers can't pay 25% more. Okay, so roll over and die. Like, what? So I got to roll up the business and end it? There's something in our society, right, where I think it's pretty obvious that you probably need doctors and dentists, even if they can't grow their companies 25%. You need them. But somehow in the public market, the public investors are of the view that if your company can't grow 25%, you're worthless. And so there's a dichotomy, and you can see that if the central bankers crank up the inflation rate from 3% to 7% to 10% to 15% to 20%, what you're doing is you're tilting the playing field in favor of the monopolies and the manufacturing businesses against the small businesses and the manufacturers and the craftsmen. And eventually you're just destroying anybody that's not highly automated and highly capital intensive. And I saw it viscerally. 99% of my competitors went out of business. Well, I am literally the last man standing in my industry. Like you might go check. I don't think there's no CEO in the enterprise software business that stayed in their job, longer than me. 99 out of 100 CEOs in my industry went out of business. The companies that I compete against gone. And people think, oh, it's just competition. Well, it's partially competition, but it's partially monetary policy. So, coming back to this entire issue, I kind of was aware that that wasn't going to work, and I didn't need the capital. I was going to generate cash, and and you're saying, well, how do I view the volatility? Well, I've got a cash cow, and what I need to be is an asset-rich company. Because if you're an asset-rich company with property or some kind of assets, then it's kind of like putting up a sail. Like you're in a boat, you're in a rowboat, you're rowing at 7 knots. The wind is blowing against you 7 knots. You're not going anywhere. Then the wind is blowing against you 14 knots. You're going backwards. At that point, you have this realization that you're never going to get to your destination and you're going to die at sea. It's like that guy, it's a sad story, right? I don't know if you noticed, the guy that was trying to row across the Atlantic last week and he died. It's very sad. But the problem is, if you can't outrow the current or outrow the wind, then you're going to die. And so I'm in a rowboat corporately, and the wind, figuratively speaking, metaphorically speaking, is the monetary inflation rate. So you can keep working harder, like that horse and animal farm or whatever, just keep working harder till your heart breaks, or you can do something. And the something is you put up a $250 million crypto sale. Okay, and then you make it a $425 million crypto sale. And so now I got a $500 million sale. If you have a $500 million sale and the monetary inflation rate's 20%, you're going to get a $100 million shareholder gain a year. And so at that point, you can see if I had 500 million in cash yielding 0, and I generate 100 million in cash flow, and if the inflation rate's 20%, then the 100 million in accretion is offset by the 100 million in dilution on the balance sheet. And in essence, 2,000 people row as hard as they can to go nowhere. On the other hand, when I flip the 500 million in cash to 500 million in Bitcoin, at that point, if Bitcoin trades up 20%, 30%, right now I've got 100 million plus 100 million. Now I'm going somewhere. Right now I've got 200 million in accretion instead of 0 in accretion. And at that point, you go borrow another 500 million. If you go short the dollar, you borrow 500 million, and now you got $1 billion crypto sale. Now the 20% inflation rate generates 200 million a year. Put another 100 million on top of it, you generate 300 million a year in shareholder gains. Divide it by 10 million shares, you got $30 a share. Now you can have a $300 or $600 stock, right? So I was aware of the volatility, but now, let me put you back in the ocean. You're in the middle of the Atlantic Ocean. You're going to die because you're rowing. I got an idea to save our lives. We'll put up a sail, and then we're going to turn and tack with the wind, and we're going to sail with the wind. And someone else says, the wind is kind of gusting. Sometimes it changes direction, and we're going to have to continually trim the sails, and we might occasionally shred a sail. It's like, yeah, but I want you to roll back the clock and try to figure out whether, the new world would have been discovered on ships with no sails. It's like you're not getting anywhere without using the wind. I mean, the history of the DuPonts, right? The DuPonts came to America because they were Huguenots, I think, and they couldn't own property, and they were run out of the country, and they had no future. So they decided to come to America. They get in a sailing ship. It's supposed to take 6 weeks. Captain gets lost. It takes 12 weeks. They run out of food. Everybody's half starving to death. It's like people think they take all this for granted, like this is easy. No, I mean, people that came to wherever they came to Australia, America, wherever it was never easy. I mean, they were dying along the way, right? The mortality rate from Amsterdam to Australia is like 30% each way. 100 people get on a boat, 30 people die before you reach your destination. It's like, it did not used to be easy, but that's with a sail. You say, well, were you afraid of the volatility? Well, I was certain I was going to die at the rowing, and so, or I was going to get tossed on a stormy sea of fate. And my view is better get tossed around by the stormy seas of fate than a certain death in a rowboat.